Hello, what up my people? Welcome back to my channel once again. So today I'm going to be sharing my trade recap on Euro USD. I actually caught 3 consecutive trades on Euro USD and all those trade hits take profit. So join me on my screen so that I can actually show you how I actually use both SMC and MSNR, that's Al-chemist Strategy, to actually catch all these 3 trades. So join me on my screen. Okay, so and for today I would actually be doing my trade recap on Euro USD. Okay, so let me start from the first trade for Euro USD, and I think I have about 6 to 7 trades within this last month that passed, and I think I won about 6 trades and I lost 1. Within 1 month I actually traded just 7 times, and we had 6 wins and 1 loss. So I'm here to actually recap how I actually took all those trades. So as you can see, this is my chart for 5 minutes time frame on Euro USD. This is my chart for 5 minutes time frame. So the first thing I would actually be looking at, like I said, I have I use SMC and I actually also use Al-chemist Strategy. So for my SMC, for this place, I'm actually using supply and demand. So the moment I came into the markets, I saw this particular demand came. Now, what is our rules? We have 4 rules. Anytime I'm trading, I always say this. I have 4 rules. My number 1 rule is break of structure. Let's see, this is our break of structure. This is our BOS. That's our rule number 1. So we got our break of structure. Next, what are we looking at next? We are looking at our order block. Now, this is our order block. This particular buys is what created these wholesales. From this particular zone here to this zone, this particular buy is what created those sales. So what am I expecting? I'm expecting the market to actually consolidate around this area, which it did, and actually tap into this particular order block. And can you see the momentum it actually went with? This is the momentum. So let's go back to our rules. So break of structure, rule number 1. Order block, rule number 2. Inducement. Now, people get confused in terms of inducements. Now, inducement is one of the most easiest thing you can actually identify on this particular market. Okay, so now the definition of inducement is the first pullback that the market does after an impulsive move. The first pullback that happens after an impulsive move. So I'll be explaining that. Okay, so now after the market created our particular demand zone here, this particular order block, can you see? Impulsive move created a fair value gap or imbalance, created an imbalance here. And you see, when it got to this particular zone, this line that you are seeing are zones. I am the one that drew these zones. These are zones. So after it got to this zone, what did it do? It pulled back a little. When it pulled back, what did it do again? It expanded more. Still went back to our next zone. Can you see? So now, if we are looking at all of this, we will say this now. This particular order block came here, retraced back a little, broke this particular zone, respected this zone, and it actually went back to respect our order block. Can you see? And when it comes back to respect this order block, I expected that this particular order block was going to be respected because of what? Because it's the closest to liquidity. Can you see this last zone? This last zone is closest to liquidity. So as I see this zone, I knew that for it to be close to this zone, I knew that this market was going to respect this particular order block. So let me go back to my rules again. Break of structure, order block, inducement. Okay. So now let's start this way. Let's do it this way. Okay, so let's draw our inducements. This is our inducements. Can you see? Rule number 1, 2, 3. And we have 4 rules. So after our inducement, what is the next rules that we are going to enter? To me, I always tell most of my traders, I will be like, entry is also a rule. Entry is also a rule. So irrespective, my entry is also part of my rule. So after break of structure, order block, inducement identified, then my entry here. Now I want to explain this particular entry. As you can see, you will notice that this entry is choppy. It's choppy. So normally I use sell limit, but at some point, if I don't see consolidation to my point of interest, I don't use sell limit. I make sure I wait for the market to get into the zone, and I will see the kind of reaction that it makes before I actually enter the trade. So when the market tapped into this particular zone, I didn't take the trade immediately. I waited. I saw this particular first rejection. Sorry, let me expand it better so that we understand what I'm saying here. So when the market tapped in for this green candle first, can you see? The moment it tapped in with this green candle, it closed inside my point of interest. The next candle rejected inside my point of interest. Can you see? So this first candle that was tapped in was swept by this second candle. Can you see? And the third candle was also swept by this particular candle here. So what am I expecting? I'm expecting an impulsive move. So the moment I saw this particular candle that came with an impulsive move, a big candle, I knew that this particular green candle is my order block. I knew this was my order block. I knew this is my supply zone. I knew this was my supply zone. So what did I do? What did I do immediately? To avoid confusion, this is what I did. I marked the whole body of the candle, and I kept my sell limit at this particular zone here, this place. So this particular candle came in, tapped me into this particular zone, and started rallying down. And you see, so this is why I said I don't use sell limits on my setups like this. If I don't see consolidation to my point of interest, I don't use sell limits. But when I see consolidation to my set point of interest, I knew that the moment it gets to my point of interest, we are going to see a big impulsive move. So this is how I actually caught the first trade, and I actually rallied this one from this particular zone from here to this zone. Okay, so the second trade, I will be explaining the second trade now. So for the second trade, as you can see, when we actually took this particular first trade, you will notice that while we are displacing to the downside, we created another order block. While we are displacing to the downside, we created another block. So what is the rules? Break of structure, here, order block here. And now, where would we call our inducement? Where would our inducement be? Where would you call your inducement? Okay, so I would see this zone as my inducement, but I would make it a little bit interesting. So this zone, this particular week or this week, which one would you call in your inducement? Okay, so now let's use the extreme inducement here, this extreme pullback, this particular first pullback. Now, when we extend it to the right, what happened? The moment the market gets to this inducement zone, what happened? Immediately, we saw a candle down. Can you see a sell candle here to induce people into the market? Now, people that entered from this particular zone, they will think they are entering from the imbalance or maybe from the fair value gap, but they didn't know that it's actually an inducement. So for the market to start coming down, it will induce some people into the market, and it took them out. Get into the order block. And what do I actually look at when we don't have consolidation? Like I said, can you see this particular setup? This setup, we'll call all this place consolidation. But this particular place, we won't call it as consolidation because it's printing big candles. It's printing big candles, and we know that it's actually on the uptrend. And it's not, you won't see it being choppy. The way this place is choppy like this, you won't see it being choppy here. You will notice that there is a big space big candles and big impulsive moves. So my second trade, like I said, first break of structure, second order block, third inducement, and fourth is my entry. So now, like I said, I don't enter immediate. I don't use sell limits if I don't see consolidation. I don't use sell limits. I don't use sell limits. I allow the market to get to my point of interest, and I will see the reaction before I react. I would see the reaction before I react. So that is what happened on this trade. So after getting all these rules, break of structure, inducement, order block, and my entry, I wait for a liquidity sweep above, inside or outside my point of interest. Liquidity sweep inside or outside my point of interest. In this case, what happened? It's outside my point of interest. The moment I saw this immediate rejection, I knew that this particular order block is going to hold the market. So I waited for a retracement. So now what did the market do? What did it do? The moment it got to sweep this particular point of interest, what did it do? It actually started moving down, pull back. The moment it got to this particular pullback, what did I do? I entered the market immediately. The moment it entered to this particular pullback, what did I do? I entered the market immediately, and I rallied this market to this zone. Can you see? Can you see? And I rallied the market to this particular zone. So this is where I entered the market. This is where I entered the market, this particular zone here. Can you see? And this particular zone got us 5:1 RR. Let me just leave it on 5:1 RR. And boom, that is our second trade. That's our second trade. Now for the third trade, can you see here? As we are displacing down, we also had another order block. We had another demand zone. So now, what happened in that demand zone? I knew that this particular demand zone is going to have a liquidity sweep. So what did I do? I want to go into this in details because these videos are not for any monetization purpose. Rather, it's for my journaling, so that as time goes on, I can actually be able to view my progress on the long run. So after displacing down, we got this demand zone, and this demand zone has not been mitigated. It hasn't been mitigated. And you see here, it has not been mitigated. This particular candle is our pullback. So this particular pullback is what I will call my inducement. This is what gave me a good confluence that this particular candle is going to hold the market. But I knew that it was going to be a liquidity sweep candle. So irrespective, the moment the market came back into my demand zone, into my supply zone, what did it do? The moment it swept the liquidity, can you see the candle that actually tapped me in? The moment it swept the liquidity, what did it do? It displayed down again. So this is how it also happened. After this so from this particular order block, it came here, tapped me in with a liquidity sweep. Can you see? Immediately the rally does straight to TP, and that is how I actually also caught this third trade on EURUSD. Okay, so this is it for the third trade. So for the fourth trade, I actually missed this particular movement. Can you see? We have an order block lying on our zone. This particular line here is a zone. Don't forget, this is a zone, and we have an order block lying on top of the zone. This is this is like an A plus confluence. But lucky enough, I was not on seat to be able to take this particular trade. I was not in the markets. But for you to have an order block lying on top of your zone, it gives you two strong confluence that the order block is going to give a reason to be respected. The zone also is going to give a reason to be respected also. So irrespective, let's look at the rules that governs an order block. With this particular order block, did it actually meet our criteria for our 4 rules? Let's see to that. Let's see. Sorry, I will need to get order block VOS here. Okay, so firstly, I will put my breakout structure here first. That's my number 1 rule. I didn't take this trade actually that I'm trying to analyze, and I'm trying to recap. I didn't take the trade, but I knew that this was a strong confluence. But irrespective, I wasn't on the market. Irrespective, I'm not angry. I'm not that very day I wasn't angry, but I knew that it wasn't just my thing. It wasn't meant for me. That particular market wasn't meant for me. So the first thing is breakout structure. Now, where is our first pullback? Where is our inducement? Where is our inducement? Okay, so now if you look at this particular impulsive move to the downside, you will notice that it has mitigated the zone, but not the body of the candle. It mitigated the zone, but not the body of the candle. Okay, so now this is what I mean. Let me take this order block out. Can you see this is the order block? These are the wicks, but this is the body candle. Let's do it this way. This is the body candle of the order block, isn't it? And this is the wick of the order block. Now the zone is lying on the wick, while the body candle is below the zone. So in matters like this, where our wicks are bigger than the body candle, we make sure we use our body candle as our confluence. You don't use the wick here. You make sure you use the body candle, because the body candle is widely the wicks are widely wider than the body candle. So irrespective, you use the body candle as your entry confirmation, and irrespective, that is the confluence for this particular trade. Like I said, I didn't take this trade. When I actually came back into the market was when I saw this particular breaker block. Even when I saw the breaker block, it was late already, because I saw the breaker block. It has mitigated to this particular zone already. So because of being too agitated to be able to miss about 2 trades in one same setup, I missed 2 trades. This is the first confluence trade that I missed, this particular one, and I also missed this breaker block. So that means I missed 2 important setups. So after missing those 2 important setups, I felt so down. So I looked for another order block that hasn't been mitigated. This is another order block that hasn't been mitigated. But what would I call this? This is an order block that actually pushed the market to the breaker block. This is the order block that pushed the market to the breaker block, and the breaker block was respected. Can you see the move? It crossed 2 zones, crossed the first zone and stopped at the second zone. And if I'm not mistaken, this is supposed to be about 150 pips, if I'm not mistaken. So like I said, irrespective, I got one SL on this particular zone here. Why did I get this SL on this zone? Like I said, I was supposed to catch this particular move. I wasn't in the markets. This particular move. I was supposed to catch this particular move to this zone here. I wasn't in the market. First missed entry. Second missed entry, I was supposed to catch this particular breaker block to market to shift it to this zone. Also, I wasn't on seat on the market. But when I came into the market was when I saw this particular order block. Can you see? So I expected that the market was going to push this particular order block to this particular pullback here. to this particular zone, but I didn't take note with this breaker block. Irrespective, the moment the market respected this order block, brought it to the breaker block, and it displaced to the upside. So this is how I missed the first trade here, the second trade here, and I got a stop loss on the third trade. So irrespective, that is how I actually missed the fourth trade, and which resulted to an SL.